morning, Tasty Nation. Aloha Friday. Mark Hawaiian Trader here. Here's my pre-market peak for Friday, June 30th, 2017. Okay, here's what I'm looking at for today. So pre-market, sorry about the flickering, but that's kind of what happens with the Thinkorswim charts for pre-market. Well, here's what happened, and I'm watching QQQ because it's where all the excitement and the action is. IB rank 62% now. It got as high as 75% yesterday. I'm looking for this continual downtrend here, excuse me. So let's take a look at pre-market. I'm looking at /NQ, which is the E-mini NASDAQ 100 index futures, as you can see up here. And here's my 15-minute chart. So, whoa. Here's what happened. Okay, so here's what happened yesterday. Okay, and here's after hours in pre-market. So nothing really happened exciting overnight. We had this little bump right now, and it's falling off. So when the market opens, I'm looking to see if this will go above overnight highs, which is here, or if it goes below overnight pre-market or overnight lows, so down here. I want it to, of course, go below here because of this, and hopefully that happens here. All this crosses down like this on my 15-minute chart. That'll lead to my daily chart in the /NQ, and this is 10 years. Let me move this to 6 months. Okay, see how it's higher highs and lower lows. Okay, higher highs, lower lows. I want that to continue, and it's a little march downward here because I think this could easily spike back up, kind of like how it did this, like a check mark. I'm looking for another check mark at my IB rank to hit 100, and when that happens, I'll definitely put on even more positions and sell even more of I guess if you're brand new, you could do golden geckos, and if you are one of my private coaching clients, go ahead and do your hybrid golden geckos that I've taught you, and you can definitely go a little bit larger when that happens. All right. Let's go back to my 1 minute. Let's see what's happening here. Yeah, hopefully this. So if this is my 1 minute chart, so what I look for is if this scoots up like here, goes higher like that, but it does not, if the underlying or /NQ doesn't go up as well past this, that's a good sign. I want that because then it'll turn over. So we shall see how that translates into QQQ real quick. Here we go. Here is pre-market in the actual QQQ. So there was an uptick, of course, as you can see, and now that the slow stochastics and OBV is down here, if it rises up here, I do not want it to go higher than here. Okay, so if this rises up, I do not want it to break below here. That's a sign of weakness. That's a good thing. There we go. Down ticks. This is what I want. If this continues down on my 1 minute chart, of course, it should translate into down on my 15-minute chart, and of course back to the daily chart. And here is QQQ on the daily chart. Same thing. Okay, we got that little signal here, meaning my 13-day EMA crossed below the 21-day EMA, which is right here, moving average right here. Okay, and hopefully that continues with a downward trend. IB rank, I want to go higher to hit 100. Hold on, let me see something real quick. Let me load. No, that's not what I want to do. There we go. All right. Yep, red down. We haven't broke below 20 here. This could easily go below here and continue lower, and IB rank will go higher. And that's what I'm looking for, because to be frank, I love when IB rank gets high like this, 63 above 50. I mean, I'll do. Hold on. Look how long it hasn't. And this is last 10 years. So look in the last year, in the last year to date even. Look, it never hit 50 once year to date. Oh, I'm sorry, here. Just recently, right? But you haven't seen this. So when this happens, what this turns into, you can sell implied volatility is overstated, which means premium is overinflated, which means you can sell, you can collect more money and sell things for a higher price with the same amount of risk. So what that translates into, here we go, let's put on a golden gecko. Here we go. And then I will adjust my positions. Good. 84, let's get as close to 84. Okay, here we go. So now, when IB rank is like this, high like this, and by the way, this is a Tastyworks platform, it's free. If you want to know how to get this free platform and open up a free account, just in the description here in the bottom of the video, you'll see a link to get Tastyworks, and you can go ahead and get that for free. So when IB rank is high like this, what happens is you can sell this same thing for more money. Meaning, whenever you sell a put, which is what we do here at Golden Gecko Options Trading, you're selling for the bid price. So when IB rank is high, when you sell a put, 1 standard deviation out of the money, which is this first dotted line right here, and when your probability is 84%. So when you're 1 standard deviation away from the strike price, and when you sell a put, you're betting in this case that the price of the stock underlying, in this case QQQ, which is right here, will stay above your put that you're selling. So in this case, if I say I'm selling the $128 put and it expires in 49 days, okay? And by the way, the best time, the most optimal time to put on these trades is when you have 45 days left to expiration. We're at 49, so we're really close there. Okay, so what I'm betting is, I'm betting that, hey, if I sell this 128 put, I'm betting someone else that QQQ will stay above $128. It's currently at $137.59. So I'm betting someone else that QQQ will stay above this price at the end of 49 days. All right, and for that bet, that person, I will collect $1.05 per contract, right? So I guess what I'm trying to say is or $100 per contract, right? I'm sorry. But what I'm saying is, when this number is low, let's say at 10, I can't collect as much. All right, so I can be at the same line, but if this number was like 10, this number would be a whole lot smaller. Good example. Now look, QQQ is NASDAQ and it's trading at $137, right? Around. Here's SPY. And let me do the same thing at SPY. I'll put on a Golden Gecko and I'll switch this out. Make sure it says the same 1 standard deviation, 84 and 2. Just to make sure we're comparing apples to apples. I want to get to the same. I can't get quite to 84, but I'm going to get as close as I can. There we go to make. Okay, but anyway, look at the put. It's at 13, and the stock is pretty much double the price. All right, and IB rank is low, and look, $1.15. So for the stock price to be double the price as QQQ, and for it to be roughly the same amount as that's why it's, you know what I mean? Imagine if this number was 62, this number would be a whole lot higher. Okay, IWM should be a little higher too. Let me look at IWM real quick. 13. I can do the same thing, just so you guys. And then I'll go like this. Whoops. I'll zoom out a little bit. Perfect. On those lines. See, look, 91 cents. Look at the price. 131. Look at IB rank. Okay, so let's go to QQQ again. I would think actually to be bigger. 131 QQQ. $3. Hold on. IWM. $1.91. Yeah, it is more. I thought it'd be even higher, but that's the main reason why you want to sell these when IB rank is high, because you can collect more money and be the same percentage away and have a good probability of making money, right? And look, almost a 90% chance of making 50% of your max profit. What we do here is we want the highest probability of success. And my main thing is I like to avoid risk. So I know if I put on this trade example right here, okay, I have almost a 89% chance of making at least 50% of my max profit. What that means is I have almost a 90% chance of making half this amount. So when you sell something, the most you can make is what you sold it for, right? So if you and I agree on a sales price, if you agree to sell me something for $1, that's what we agreed upon. There's no way you can make more than $1 because we've already agreed on that's how much you're going to sell me something for. Now, if that item cost you 50 cents, you just made 50% of your max profit. So in this case, let's say, let me try to do something like this, maybe. No. Anyway, I'll just leave it like that. I don't want to confuse anyone. All right. So let's say, if you can, in this case, we're selling first and buying later, meaning we're selling something when IV rank is high, right? And we're getting a certain amount of money for it, and we're going to buy it back after IV rank drops down back low. Okay, so sell high, buy low. What that translates into here is, it's 96 bucks, but I'm just gonna round up to $1 for the conversation to make it easy. We're selling something for $1, and when we're correct, and as time goes by, right, as this number gets smaller because time goes by and this number decreases and the QQQ stays within this green area, right, we can buy it back for, of course, less than $1. So once we can buy it back for 50 cents or 50 bucks, which is half of what we sold it for, we close that trade and go on and deploy that capital into another trade, right? So I would like to know, what are the chances of this trade right here make money? There's a 73% chance that it makes money. There's an 89% chance that there will be a point in time where I can close this trade and make 50% of my max profit. That's what I'm shooting for. All right, I'll go more into this later. In the meantime, I'm gonna watch a little Tasty Trade, and if you're new, you should watch this show. I do it every morning with coffee or whatever. Tasty Trade is an excellent, it's where my journey with option trading started. And then what happened was I started my free forum called tastytrade.freeforums.net, and I did this as a place basically to combine and take my notes. And then what happened was I started trading these golden geckos right here, and I started calling the project Making Dough with Tasty Trade in 2014. I did it again in 2015, and it was great. But by then, I kind of just kept it up to see how the golden geckos were doing. But then I developed my own style, which was a lot more consistent and a lot more profitable than a normal golden gecko. So full disclosure and disclaimer, I do not trade this style of golden gecko personally, but this is how I learned originally, and this is excellent, and I found it great for someone beginning. There's a hybrid version of this that is much more powerful, much more consistent, and also protects you from these dark flash crashes or black swan events that I was afraid of. Like, I was afraid of a move that would kind of go below here, and if the stock dropped above here or below here or way above here, this trade will lose money. I wanted to avoid that, and I developed a way to do that. It gets a little more complicated, and people were always, to be honest, just kept on asking what I was doing. And finally, it got to the point where I set up basically a private coaching scenario where for a flat fee, you get unlimited coaching with me. You call me whenever you want or whatever, and I walk you through everything start to finish. More information about that can be found out at the bottom of the description as well, or towards the end of these videos. So in the meantime, but you can learn everything for free. You can, it's not, you can develop your own style and do everything for free. Most of my private clients just want to avoid the agony and stress of trying to figure it out on their own, and they just kind of want to learn the right way the first time instead of having to, trial and error their way through. but this channel is great. The Tastyworks platform is free. Scroll down to the bottom and you can click get Tastyworks here to get that. Feel free to go to my free forum. All this is free. You can kind of follow my journey and what happened. Say hi to me, shout out, or to be frank, just go check out. You can actually check out the website, and you can chat with me under my website as well, right here. Okay, and now this video right here on my homepage will tell you a little bit more about it, or you can just feel free to just click on the link and chat with me with that service over there. Occasionally I'll put stuff on Twitter. This is great if you're new. This is my free vertical spread cheat sheet. So if you're brand new to options trading, this is great because this will tell you, you know, what happens if you're bullish and what you could do. You could buy a call or sell a put. If you're bearish on something, you could sell a call or buy a put. Buy a put. And it'll tell you what you're looking for, what you want to happen based on the different scenarios, and what can happen to you based on the risk. So this is something I made a long time ago, just to help me understand it, you know, what I was doing, because before I was in an options trader, I was just basically a day trader. So occasionally I'll put stuff as well, and you can follow me on that as well. In the meantime, let's check out. I'm gonna go and watch a little tasty trade here and see what's going on. Nasdaq is up a little bit, as you can see here, but I like this. See, this is really good. I'm liking this. I'm liking this. I want that follow through. I want that follow through coming on here. That'd be great. Anyway, I'll come back online if something happens. If not, look for my post market Aloha Friday peak later on after the close. Take care.